Good afternoon, everybody. How are you? I want to thank you all for coming here today. Woo! What recession? What bull market? I keep reading on all these social media groups about how we're in a recession. I don't see it. I don't see it. We're going to talk a lot about that, actually. We're the only company that's telling people more or less the truth about the markets. This idea that gurus don't work and lagging indicators don't work and most everything doesn't work. 95% of people still not trading very successfully. And so we believe that the markets are just legalized gambling, I guess you could say. And the banks are the casinos. They're in cahoots with the regulators and the wealthy power brokers around the world. And in my opinion, in my estimation, 15 years doing this now, if you study what the crooks do, if you profile them, if you analyze the data that they leave behind, it will tell you a lot about what their intentions are 1 minute, 5 minutes, an hour, a day, a week from now. To prove that, we essentially give out the trading times for popular markets like the E-mini S&P, Dow, crude futures, gold, and kind of come back 2 days later and analyze what happened after the fact. Give me 1 second here. I am just a little underprepared here. I needed to get something together for you, if you'll bear with me. Stand by 1 second. We have a new login procedure for the forecasts so that people don't use them eternally. You get sort of a 4-week look at the times, I guess, a free trial of sorts. And every week I forget my password. So I had to get that together for you because I wanted you to see what I was actually talking about. I thought I had everything ready. This is kind of embarrassing. Stand by, I'm almost there. Oh, that's why I'm looking in the wrong spot. I got it. Just breathe. There it is. I used to be able to just click on the link and get to this page. The problem was people like Chris would come for 2 years and they would never they would never buy the software. They would just use the signals every week. And so everyone said, why don't we just put a limit on it? You guys see this page on my screen? It should say warp forecasts on it. Apologies. Let me know if that, all right, cool. So what we do every week is we're giving out these times in advance, and they represent an analysis of that market over the last several thousand bars. And the program, which is an indicator for Ninjatrader, is looking for possible moves in the future based on what they almost always do at these times in the past. And so when we're looking at the forecast for the E-mini S&P 3-minute today, we've had this information since Tuesday of this week, meaning we can see when the times are coming in the future. And since Tuesday, we've been waiting for selling signals at 6:36, 7:30, 8:18, 10:09, 12:51, 2:03, 3 o'clock, and 4:12. We've been waiting for, since Tuesday, buying signals at these times. So the times will always appear relative to your computer clock. My computer clock is set to Eastern time, and so they're all Eastern daylight savings time. And what we're going to look at and see together is, in fact, what happened at those times. But one of the things I want to show you first is why we believe markets are predictable. In fact, I've seen about 2 or 3 posts across the dozen or so trading groups that I'm now a member of on Facebook, where people have repeatedly said, you can't predict when markets are going to move in a certain direction. It's impossible. The best thing you can do is sort of hope to hack it out. Use your price action tools, follow a good guru, keep a trading journal. The problem is most people don't do that. Most gurus are horrible. Most indicators don't work. Most trading systems are curve fit or thinly disguised marketing solutions. This chart right here is a daily chart for oil futures, the September contract. And everywhere you see a red dot on the screen represents the date of a new moon. A new moon, which is the absence of light or irradiated reflected energy in the sky. Everywhere you see a large green dot, like where my cursor is here from July 3rd, represents a full moon. And at this past full moon, we have customers that trade oil, and they asked me, they came up to me and said, what do you think oil is going to do next? And I said, well, I'm going to go back and study what happened at the full moon in January, at the full moon in February, at the full moon in April, and the full moon in May. The other 2 full moons were pattern 5s, and I don't know that we have time to get into what a pattern 5 is. It's basically a signal where the market goes in the exact opposite direction. Instead of going up, it's expected to go down. And what I did was I took all of the moves from the low to the high that the past full moons pushed until the red dot, which is the new moon. And one of the things you start to figure out really quick is that when oil gets to a new moon, it drops in price, meaning it fell December, it fell end of January, it fell for 2 days at least at the end of February. Boy, did it fall end of April. It fell again 3rd week of May, and then it fell again, put in a swing pivot at the end of June. So when we got to the full moon in July, I simply looked back and I said, when we arrive at this weird signal that we know to be effective and statistically relevant. How far do banks push the price? And I put 4 levels here as sort of targets, where the intermediate zone right here sort of represented the middle or the median of where we expected price to go. And so you can sort of see here, this represented the highest we would expect it to move. This is the second highest, and this was sort of the minimum. So Dave, can you see that okay? And on the close of this bar right here, we were still at 69.75, about $70. So when we think predictively, I want you to experience all these pieces that come into play. Number one, we had a bottom in place, right? 1, 2, 3 touches, double bottom right here. We got to the full moon. The trend was down. I'm sure all the pundits on TV were saying, oh, oil's going to go to zero again. Better buy a tanker. Oh. The way we look at the world says this: it's a full moon. When there's a full moon, the electromagnetic spectrum is irradiating the population of the planet. People feel excited. They are less prone to be paranoid. They're more prone to take risks, looser with their money. And so we're going to enter the market in that zone right here. Our stop is going to be below the low. And at a bare minimum, we expect it to come to the bottom of this, the very first, or the minimum that it's moved in the past at that time. And so you can see relatively quickly that the risk is somewhere around $2,600, and the minimum reward is $38.70. We blew right through that. We got to the top of the zone, 5,000, and now I believe we're going to hit this next limit, which is $7.85. We have until the next new moon, which is in 4 days, July 17th. So we should hit this level before July 17th and possibly this one. I can also use this to think proactively in terms of stops. They're likely now to run the stops above that swing high because we've broken through the stops of the other swing high. And that's where liquidity is created. That's where you usually get in the wrong side of the trade. It doesn't just apply to things like oil. We can use predictive signals in relation to things like the largest stock in the world, Apple. What do these signals represent? These signals represent the first and the third quarter moon phases. Not the full and the new, the intermediate ones. Whoops. So on my chart for Apple, I'm looking at these two dates when the moon is half full and the moon is half empty. In oil, we were looking at these two, not anymore. And I have traders that are using this tool right now, the daily cycle marker tool. And everywhere you see a first quarter date, when you look up in the night sky and the moon is half full, that's called a first quarter. I know this sounds crazy, but I promise we're going to get to some really interesting intraday stuff here in a moment. Can anybody tell me, looking at my chart, able to verify themselves with easily accessible internet data, what generally happens to the price of Apple for about 2 weeks when it arrives at a first quarter lunar phase? Remember, you can go online right now, you can look up the dates for yourself, and you can compare where they are in relation to my dots and prove for yourself that I'm not lying to you right now. I'm just telling you something nobody talks about because it's weird. And if you look at what happens at the third quarter, what generally happens to the price of Apple stock. It goes down or goes sideways in an uptrend. So it begins to beg the question, what if we bought calls for Apple at every first quarter lunar phase? Not studying volume, not studying what Jim Cramer says on Mad Money, not studying order flow, not studying support or resistance levels, or reading our trade journal the night before, or asking 1,000 knuckleheads on a Facebook forum or a Discord somewhere what they think Apple's going to do. What if we just purchase calls when the moon was half full? Boy, that sure seems to have some important repercussions, especially as we go back further and further and further in the data. Boy, Earl, that sure seems to be a relatively consistent thing. Here's 3 years ago. It's doing the same thing in 2020. What if we just bought calls in Apple on the date of the first quarter lunar phase? Now, I don't say all of this willy-nilly just to kind of say, it was so obvious, don't you see it? It took me about 7 years to figure it out. And that's why I'm sharing it with you, because the people you're competing with, the guys over at JP Morgan, they're not sharing. They know something about the human population. They know something about the markets that you don't know. Is that a conspiratorial statement? 100%. But I know something that you guys don't know. They've been following these patterns for over 100 years. In fact, the original global financier, the grand poobah himself. Let's see if we can see what he had to say. I know it's up here somewhere. The original JP Morgan said, millionaires don't use astrology, billionaires do. Where is he? There he is. That's an actual quote. He said that out loud to other people around him. JP Morgan knows something about how and why humans behave the way they do. And so what's ridiculous to most people, what's cast aside as nonsensical, is done so for a reason. If you, for example, 10 or 20 years ago said the oil companies conspire together to keep the price of oil high so that they can engorge themselves and their shareholders on profits, people would say, no, these are American companies, they're patriotic. And now we know 20 years later, in their own boardroom meeting minutes, in their own recorded shareholder meetings, they're saying, we're not exploring for oil, we're squeezing every last dime we can out of the American consumer. They're bold-faced exclaiming these things that were taboo to even think of out loud. Bala, if you don't have the daily cycle marker chart, you wouldn't see this as a warp user. You would have to use the daily signals from the warp chart, which we'll look at here in one moment. I wanted to show you one last example before we look at what happened on the warp charts, something that we were studying early this week in my Pro Room class. Customers wanted to know what the E-mini S&P was going to do. And so, Dave, what we did together, we saw that we were at a third quarter lunar phase. That's a moon half empty. And Earl, you'll remember earlier this week on Tuesday, I told everyone, well, let's go back and look and see what happens at a third quarter lunar phase lately. And can everyone here see that it appears that the price moved up at nearly every one of the third quarter lunar phases? Paul, can you see that? Bala, it either went a little bit up and ended up flat, or it just kind of drifted up. Weird. And I thought that's not what happens in other markets, but that's what's happening now. And on Tuesday in our live room, I told people, I have the recording. If you want, I can send it to you to look at. The words were immortalized electronically. Paul, I did the same thing for the S&P that I did for oil. And I told the people in the room, we're going to hit 65 at a minimum, 44.65. The median will be between 507 and 518. And then before the next phase 4, we're going to hit 544, 45, 44. Remember when I said that in the room this morning, guys? Before the market closes today, we're going to hit 44 using the size of the moon in the sky as a guide. It's weird. Now, newsflash, spoiler alert. No one from Fox Business calls my house in the morning. No one from CNBC is knocking on my door with a throng of paparazzi on the porch. Nobody wants to hear what I have to say, except a select group of customers over the years who've plugged into what we teach here and are leveraging it themselves to make money. Someone who talked about the same things that I'm sharing with you, a man named William Delbert Gann, was interviewed by the editor of Ticker and Investment Digest, sort of like a precursor to the Wall Street Journal. And when they interviewed Gann, they submitted a disclaimer. Hey, Dorian, when they interviewed Gann, they said, look, we've followed this guy around. We've chronicled and documented all of his trades. We sent somebody that everybody on Wall Street trusts to come back with a fair accounting of what he saw. And here's the unfortunate reality in relation to everything I've just shown you. Here's what he said. We submit this report about these predictive signals to our readers in full recognition of the fact that in Wall Street, a man with a new idea which violates the traditions of the market. What are the traditions of trading right now? What do you see in your YouTube feed and your TikTok and your Facebook Reels? What do you see in your inboxes and your Facebook groups? Right? It's always the same hype. Quit your job. Our customer, Bill Jones, just booked his first trade, $85,000 in the first 30 days. Right? It's always the same garbage. If you follow our simple to read signals, you'll be making millions shortly. Well, here's what they said about Gann. His stuff violated the traditions that people were used to. His perspectives encouraged a scientific view of the markets. And what was the result? It was not welcomed by the majority of traders. Nobody wanted to hear about it. Very few people said, hey, how's he doing that? Why? Well, according to the editor, Gann forced people to do research and think. He said, most people aren't going to accept this because it forces you to think. Well, why is that a problem, Mr. Editor? Because the majority of traders hate that. They hate thinking. They hate doing research. This hurts my head, this crazy moon stuff. Meh. When we come down into the warp level of the product line that we're working with here, we have additional opportunities that aren't based on the size of the moon in the sky. And when we're working with the warp indicator, which is an entirely different animal, its presuppositions are founded in the idea that markets are predictable. Markets are predictable. Case in point, my wife's great aunt from Miami wants to come hang out with the family. She's an excitable woman. She's high energy, random thoughts, kind of bounces around. She drives my mother-in-law, who lives up the road, crazy. My wife somehow becomes the concierge of the visit and is expected to provide a list of activities like Julie on the Love Boat. When my wife's great aunt comes into town, it is predictably chaotic and riddled with anxiety. Every single time, I know what to expect. All romantic activities cease. It's a week before and 3 days after. I might as well be a half rotten avocado, Earl, when my wife's aunt comes to town. There's zero interest. I can expect it. I can plan out almost to the minute when the first arguments will creep in. Well, warp is like that too. And in this case, with NVIDIA on a daily chart, you'll see, while not based on lunar signals, we're referencing the historical patterns of NVIDIA, not seasonality, not, general movements in the fall and the spring and the winter. These are specifically data mined patterns that Warp has gone back into the past to find and says, hey, you should look for calls and start to buy NVIDIA on June 30th. Well, for how long? Until August 10th. Well, how far might NVIDIA go? Well, it went up on January 24th, it went up on March 1st, it went up on April 26th, and it went up on May 12th. We can measure how far it went up each time. How big was the push each time? And then we can take those arrows, Earl, and we can just slide them over here and get a very real sense. What's the minimum amount it should move? What's the median amount it should move? What's the maximum it should move? And we've been looking at this chart in this room here for a while. It hit the minimum, pretty much closed on it. Here's the next zone where the median is expected, and we've just touched it. The maximum is up here, nearly $560, is that right? And all of that is based on predictions. It's based on time. Time is the secret weapon, the missing ingredient that gives us our 4.5, 4.7 out of 5 Trustpilot rating with verified customers, right? We can do the same thing with Tesla. When's the next big move in Tesla expected? August 8th is the next large move. And if you're a Tesla options trader or you purchase the stock, a buy and hold person, we would have told you January 24th, April 5th, April 26th, June 5th were the dates to watch. Bala says, can you go over that technique again? Yeah, so Bala, what I'm doing here on the daily, and it's something you could do intraday too, I'm doing something I've been doing for about 10 years called an exertion analysis. And it's based on the following. Banks run the markets. Banks are predictable because people are predictable and don't know it. Let's measure how far the move goes each buy and sell signal and project on future signals. So Bala, what usually happens is if I go back and I reference every one of the past buy signals, I'll usually draw a triangle. But what usually happens is we'll have a minimum amount, then we'll have sort of an average middle where you'll have like the majority of the moves, and then you'll have an outlier, this crazy move that could possibly happen. So Bala, in the case of Tesla, I can come here and say, well, from the low to the high, that's how far it moved in January. From the low to the high, woo, that's how far it moved in April. From the low to the high of that push, that's how far it moved. And from the low to the high, that's how far it moved. Does that make sense, Bala? How far did the blankers push when they pushed? And then what I do is, if we come over here, when we get ready for the next push up, I can align all those things together and have a real sense of what those levels are. And so in this case, with a very small look back, there's the minimum, there's the median, and there's the outlier. Does that make sense? You do the same thing with Amazon, right? We can do it with any market. Any questions about looking at this stuff on daily cycles and targets and things? We can also use it on forex. We can do this on crypto, right? We're not limited to any market, whatever we have historical data for. So here for the euro dollar, today for the first time, Merle told me the dollar and the euro are not in parity together. The euro is more than the US dollar. Oh, we can come here on a daily chart and ask the software to take a look at it. And Bala, can you see what the prediction was for June 30th in the direction of the trend? We were expecting a move up on June 7th. We were expecting a move up on June 30th. We were expecting a move up on May 24th, April 21st, and April 6th. Yeah. How long is a move supposed to last? Until June 20th. It's got another week. Yeehaw. Right? Could apply the same thing to Bitcoin futures. Would you like to know when to buy Bitcoin and for how long to hold it? What are the windows? We could have bought Bitcoin on February 9th. We could have bought Bitcoin on March 10th. We could have bought it on April 17th. You had a whole one-day signal here. You actually finished a little higher on May 8th, and then the last Bitcoin signal was on June 7th. So that signal for Bitcoin is going to end on the 17th in 4 days. Well, if it's going to end in 4 days, Earl, do you see how they're running the stops right here? Everyone is buying the breakout right now, Bala, right? Everyone is calling their barstool bro down the street. Dude, Bitcoin just broke out. It's going to 100,000, dude. Dude, tell your little brother. And what are the banks preparing to do right now? What are the banks preparing to do right now? Who's selling all the retail traders Bitcoin futures right now? Banks. What usually happens at the blue dots lately? It went down here, not dramatically here, but there's a small move down. There was a move down here, and there was a small move down there. What's the expectation for the 17th now in July? Right as we break through. Probably a nice high volume candle too. So this is all well and good on a daily time frame, right? The ability to tell the computer, the program, hey, be my personal investigator. Tell me when to buy and sell NVIDIA, Tesla, Amazon, GE, blah, blah, blah. Things get really interesting when we're looking at the signals intraday. Who can tell me what was released today? Anybody? There were some reports released today. Right? Yeah, unemployment, inflation, all that good stuff. So these were the intraday signals for the Asian London US session. PPI, the report that's fun to watch and fun to say. You'll remember a few minutes ago that I told you I gave everyone the times in advance on Tuesday. So all the times that you'll see here, well, let me get the 5 minute. I'm still looking at the 3. These are the ones that I've been showing on the Facebook pages. You see where it says 9:35, 10:10, 11:05, right here. 9:35, 10:10, 11:05. So can everyone see that I'm not making anything up? The times that are on today's chart were the ones that the public had access to since Tuesday. No shenanigans. Thank you. So I want you to see that conceptually, it's not much different than what we were referencing at the beginning of the webinar. Conceptually, it's sort of like the lunar phases, right? We know when they're coming. We know what the direction of the move is. We know when the next dates are in the future. Just like our Apple chart, right? We know when the signal is coming. We know when the signal should end. And we know when the next signal will be here. So conceptually, what I'm showing you intraday right now with Warp, while not based on lunar signals, we're still dipping the theoretical cup in the same well of time. The fabric, the substance of the fuel that drives this trading engine is time. And so we always know when the next signal is coming because the moon is the moon is the moon. Well, with Warp, it's the same way. We know when the next signal is coming, what color it will be, what the direction is. So we knew coming into this morning that there was a sell signal at 7:25, a sell signal, a buy signal rather, a buy signal at 6:15, a sell signal at 5:40 London time, New York time. What is that? 9:40 London time. We had a buy signal at the open. We had a sell signal at 10:10, and then we had a buy signal at 11:05. Right? We knew there was a sell signal coming at 12:50. We knew there was a buy signal coming at 1:55, a sell signal at 3 o'clock, and a buy signal at 3:50.
So we had all this information in the public domain since Tuesday. Any questions at this point before I go any further? And that's right, we have the econ right here. Here's the PPI report. Any questions about that so far? Okay. What I want to show you is how I would trade that and what I teach every week. What's the difference between the signal and the setup? The raw data and a mechanical way to trade it. The first way is called a signal with trend. If we have a buy dot in the direction of the 120 moving average, I pick the 120. I've been using it for so long that I've standardized it in our webinar. If there's a buy time in the direction of the buying trend, we're going to trade it. Well, how? How are we going to trade it, Michael? I'm going to put a stop 1.5 average true range values away from the low of the candle. The ATR is an indicator invented by Wells Wilder of the 80s fame. Technical analysis was sort of exploding. Indicators were being born like stars in the new universe. And it's a way for us to know how big is a 5-minute bar now? How big is a 3-minute bar on average now? How many ticks from top to bottom on average is a 1-hour bar? And so the formula is a dynamic number. It changes as volatility increases and decreases. So the stop over here when the candles are bigger is larger. The stop over here when the candles are smaller is smaller. We're going to enter at the close of the candle and exit by the next time. So let me just say something about that really quickly. Most traders freak out because they don't know how long to stay in. There's no reason. They're watching lagging indicators to tell them when to get out. They're listening to that panicked throng of voices in their head to get out. Most people don't know when to leave. They're looking at strange things like Fibonacci projections and VWAP levels. We've invented so many stupid things to help us divine like a seance when to get in and get out that I've lost track of the ways people have invented to lose money. If there's a buying signal here, the software tells us when JP Morgan and Credit Suisse and Deutsche Bank usually take profit. Well, Michael, can I stay in if I trail my stop up and get in and let it ride to the next signal? Sure you can. But for the purposes of my demonstration, I keep it really simple. So let's take a look at the hardest market to predict for most traders with the signals that I published 2 days ago, using the signals with trend, the buy times in the direction of the moving average. So using the system that I teach every week, it's on every one of the YouTube videos that you'll hear my crazy voice narrating. These were the times that we were waiting for a move. The white dot represents 1.5 ATR values away from the low of the candle. 1.5 ATR values away from the low of the candle. That's our stop. We put our buy stop, or sell stop rather, just on the other side of that line. Let's say we drank a lot of prime fuel, tons of caffeine, Red Bull, went nuts. We enter at the close of the 340 candle. We exit at the close of the 455 candle. We enter at the close of the 510 candle. We exit by the close of the 540 candle. Womp womp. We enter at the close of the 615 candle. We exit at the close of the 725 candle. We enter at the close of the 935 candle. We exit at the close by the 1010 signal. We enter at the close of the 1105 signal. We exit by the close of the 1250 candle. We enter at the close of the 155 candle. We exit at the close of the 3 o'clock candle. If you trade past 3 o'clock, you probably have a problem with your life and you need counseling. But for the sake of this experiment, we will chronicle that and keep it all on the up and up right here. Everybody with me so far? Okay, that's the signal with trend. +3, +1, +1, +6, -5, -1. The second signal that we reference is called a puncture trade. A puncture trade is a way of saying a failure with trend. Think of it like a breakout. If we're expecting sellers at a certain time and they don't show up, it means that the institutions who normally sell are not. They're not doing the thing they usually do. And so as a matter of consequence, I trade through the stop of the counter trend signal. Once it goes through that blue line in the direction of the trade, my stop goes below the candle that punctured the blue line. This is like an impulse move. It is an impulse move. They're going. The rocket has been lit. Get out of the way. Well, on our ES chart, there's a couple instances of that. I want you to see the first one right here. We enter, we exit, and then we enter again. First puncture is here. Your stop goes below that candle. We come up, we come up, we come up. It's only $2.50 before it comes back down right here and hits the stop. So our stop would go one tick under the candle, which punctured that blue line. Now it comes through a second time, and then hits the stop again. Econ, PPI, fun to say. We lose $2.50. Then it opens up and goes right through a third time. So there's a puncture here, and a puncture here. Third time is a what? It's a charm. So now we enter at the blue line, it comes up, comes down, and we finish 6.75 higher. So we get an extra $3 out of that move. Where else is there a puncture, by the way? Oh, I don't know. Over here. You'll notice that it mimics the example that I show every week. The 3 o'clock signal is in the direction of the 120 exponential moving average, EMA. You can use a 50, you can use an 89, you can use your grandma's secret sauce. I don't care. Be consistent with the trend filter that you use. When it breaks through the blue line, we put a stop below the candle. We put a stop below the candle that punctures the counter trend signal. The people who normally sell are not. They're not. They're nowhere to be found. What does that mean? They like buying right now. Hey, you guys want to sell right now? Nah, this is too much fun. Let it go. Well, let it go for them means go long for me. So we are now long right here. We enter when it crosses the blue line, and we exit at the close of the next buy signal. Question: how much could I have manipulated these results? to make my webinar look good today? How many guru explainaways have I presented? What's an explainaway? Well, if you were in my super secret winner's choice room, I would have shown you my super duper zero lag filter, and we wouldn't have had any losses today. That's what I mean. Dorian, was there anything I could do between publishing the times on Tuesday, publishing the rules for the trading system on Tuesday, publishing how large the stops would be when we arrived at those times on Tuesday? Is there anything I could have done to influence the outcome 2 days later? Jason, is there anything I could have done to make this better than it was, or worse than it was, or filter out things? No. That's why I tell people about it. That's why I join these crazy Facebook groups and I post this stuff, because about 5% of people who hear me are tired of the crap. And they know that something like this is happening. And they just want the truth. At the end of the day, when you add everything up, it's $11 worth of movement. Now, this is, of course, NFA wants me to tell you, it's all hypothetical, right? No live account statements to show you for this. That's not what today is. Today isn't about me proving how large my genitalia is in relation to yours. Bali, you can ask Ron, because there's nothing I could do. My settings are the same every week. Every week you ask this question, every week I answer it. I have a 7-14-00 with a swing strength of 8 calendar days. My data is coming from the kinetic data feed, and that's where these times are coming from. There's no additional input from me in terms of why your question is what it is. Yeah, so $11 or $550, and most of that came from the US session, right? These are loser, loser, loser. Basically, you lost everything you made in the Euro session. So Jason, this is all today. Any questions? Again, I'm not the first person who came up with this. 150 years ago, the weirdo from Lufkin, Texas, who talked funny. Fun fact, Gann lived in the same area that President Bush, the son, not the father, well, actually both of them, came from. Strategery. We're going to get Saddam Hussein dead or alive. Picture him saying what I'm reading to now by a study of the time periods and time cycles. You will learn why tops and bottoms are found at certain times and why resistance levels are so strong at certain times. The other quote was this one. It's my favorite. Time is the most important factor in determining market movements. And by studying the past records, Jason, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. And what did they say about him? Remember? He showed his trades over and over again. What did he say? Hey, we followed the weirdo. We journaled all of his trades. And when we tried to stop normal traders and show them what they were doing, they weren't interested. Because thinking is hard. Most traders were not interested in this. Most traders are not interested in this. Jason, fun fact. On our website, when we give away these times, when we ask people, hey, take a video demo, and people want to learn about us, and they come in and they take the demo, they get in our email chain. What percentage of people, Jason, do you think actually purchased the software seeing what I just showed you here today? What percentage, if you had to guess? Keep going lower. Jason said 30. People who sat in the webinar and saw what you're seeing, Dorian guessed it, less than 5%. Fewer than 5% every year for the last 15 years. It's the same statistic. 1,000 people come in, 5% of that. 100 people come in, 5% of that. Because they would rather believe the other stuff, right? Here's gold futures today. What were we expecting 2 days after the times were published? What did the software tell us the banks had planned? 714.0. I don't add a 21 like Ron does. 714.0. So Jason, the software on Tuesday told us to look for a move down at 8 o'clock, look for a move up until 9:45, look for a move down until 10:40, look for a move up until 11:30, and then what? Down until 12:30. That's gold futures. Same charts, same web page that all the other customers had access to, right? If we come and look at the NASDAQ on a 1 minute chart, Jason, could you have traded all those white dots long today in the NASDAQ? Would you like to have known when the guys at JP Morgan were going, all right, boys, load up, load another cannon shell into the hopper. Boom. Why is it going up right now? And you're just sitting here, you know exactly what to do and when to do it. Is it 100%? No, nothing in trading is 100%. Nobody likes to hear it when I say that. Well, my guru is 80%. Your guru trades with a 100 tick stop and a 2 tick target. I could do that. -3, -7, -5. Here we go. Whee! +14, -4, +4, -1, whee! +4, break even, stop, -2, whee! +19, whee! +4, whee! +12, whee! Ah, stop out, -7. And that's in the afternoon. Could we do the same thing in the morning? Heck yeah. Did it just work today or did it work in the Globex session overnight? If you live in Europe, I'm so sorry. You can come here whenever you want to visit, but you had the same opportunities Jason had to trade during the afternoon today. You could have traded the London session if you like to get up at night and stare at things in the dark and your wife says, what are you doing? Not that I do that. Did the signals work in the London session last night? Yeah. They work every day. That's yesterday. Any coincidence that the times keep working? No. Oil futures. Jason, this is today's oil future on a 1 minute chart. Did you know when to look for the moves up? Did you know how long to hold the trade? Did you not get out early because your wife was yelling at you, telling you you're going to be a failure? My mother was right about you. You're a horrible trader. Blah, 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 blah. Ding. I'm going to go long at 203. I'm going to get out at 221. What do I do after that? Make a sandwich. Look at your phone. Get in. Get out. Get in. Get out. Get in. Get out. Get in. Get out. Get in. Stop. Womp womp. Yeah. Oil on a 1 minute chart. Did it look like the oil traders had a plan today? Sure looks like it. 3 minute chart. What did the software warn us about on a 3 minute chart since Tuesday? What was the plan? You ready? This is going to hurt your head. It already hurts mine, and I know what's coming. The software told us that JP was going to drop the price at 5 o'clock. They were going to then push it up at 5:57. Jason, what were they going to do at 7:21, according to a weird guy who sends you emails and annoys you on Facebook Messenger? There it is. All the times I'm showing you, carved in stone. 327. $327. Down, up, down, up, down, up. Stop run. You're in the money. Trade goes higher. What's supposed to happen at 10:03? Woo! Straight up. Until when? Look at this. Look at that. Ding! That's the high. Oh! How long were they supposed to drop it, according to what the indicator found? Well, they were supposed to drop it until ding, the low right here at 10:33. What was supposed to happen at 10:33? Shazam. Until when? 11:09. Shazam. And then a stop. Stops out right here. No bueno. No macaroni with cheese. 12:03 down until 12:18, and now we have lunch. We're eating our hummus, little tzatziki. Now we start going. Then woo! About 60 to 70% of the time on average. Okay, where are we? 509. Holy cow. Yeah. Here's the pound dollar today if you were trading forex. Does this make trading forex a little easier? If you knew what times to look for your 5, 10, 15 pips to get in, get out. Yeah. We don't sell to 95% of the customers out there because they don't like to think. They want me to give them an up or down green arrow and say, buy now, sell now. They want me to say things like Fibonacci. They want me to say things like order flow and VWAP. Well, my brother-in-law uses a VWAP. Do you guys have a VWAP? What color is your VWAP? Do you look at the support levels of the VWAP or the resistance levels of the VWAP? What's your delta? Do you show a delta? How large is your delta? I don't know any of that. I know that JP Morgan pushes the price of oil up at 10:03 until 10:21. I'm going to buy then. Okay. Is there a smoothing out over a longer time frame, 5 minutes, 15 minutes, versus using a 1 minute chart? No, Lowell. There's no time frame that it works better on. So pick a market, Lowell. Pick any market and pick any time frame for me so I can go off script a little bit. Gold. All right, so we'll do GC, September 23. What are we up to on gold? August. Now pick a time frame. What size? It has to be a time-based bar. Could be a 17-minute chart, could be a daily chart, could be an hourly. It won't matter to me. I won't charge your credit card. All right, so we'll look at the daily. So pick daily. We'll load the template that I have with the Warp program on it. Okay, over on the monitor here, it's loading up. Ready? Lowell, if I told you that was a 1-minute NASDAQ chart or a 5-minute oil chart or a 3-minute Bitcoin chart, you wouldn't know the difference, right? What was the last signal in gold? June 28th. Until when? July 20th. Are we catching the big moves? Can you use this as a filter for your trends when you're trading intraday instead of looking at some? Michael, I look at the weekly, the daily, the monthly, then I look at the annual, and then I look at the 10-year. I look at the 15, the 5, the 3, the 1, and the 30-second, and I trade off of a 9-minute bar. How do you look at all those things? I'm going to look for longs in gold between March 1st and April 10th. I'm going to look for longs in gold between May 5th and May 22nd. I'm going to not trade gold, Lowell, when these bars are so close together because it implies chop. When the bars are close together, it implies chop. Did he just say he could tell us when it's going to be choppy? You can predict when a market's going to be choppy? Jason says, will you teach us how to use this? Will you lead us into the promised land? So Jason, you see that number right there? What's that number? How many people give us a 5-star? 92. I'm working with this guy right here. He trades 1 hour a day between 7 and 8 o'clock on the ES when the market's not moving. I'm working on him. But I want you to see some things down here. Easy to use without previous knowledge of the markets. Wonderful, what education? Wonderful, passionate education. We're really good at the training part. In fact, that's what most people talk about after they get the software from us. So Lowell, it doesn't matter what the time frame is. That's kind of what I wanted to go full circle on. I'm just using the same settings here. Here's an hourly chart. Would you say that we're in that 60 to 70% pocket on gold on a 1 hour chart? You picked the market. I didn't know. And I didn't know what it would look like on an hourly. I just did it. I'm essentially saying that the casino has programmed the slot machines to give out jackpots at key times throughout the day, interspersed throughout the mornings and afternoons and evenings. The casinos know when the slot machines will pay out. We study the software of the slot machine. We put a camera in front of it and record it, pull after pull after pull after pull. And the warp indicator, Lowell, tells us what time of day to pull the handle and put our quarter in. The warp software tells us what time of day to place our bet. Big bet, small bet. In the direction of the trend, big bet. Counter trend, small risk, small bet. Ding, 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 ding. Any questions? Because here's the weird part of the webinar. Jason, this is the 95% conundrum that I have. See everything to the right of that line, Lowell? July 14th, July 16th, July 18th, July 19th. It's 5 o'clock, 1 o'clock, 7 o'clock, 11 o'clock, 8 o'clock, 10 o'clock, 8 o'clock, 10 o'clock. You can know with the same levels of accuracy you saw demonstrated this week what the market you trade will do tomorrow and Monday and Tuesday and Wednesday and Thursday of next week. You can know. It is possible to know. This is not rocket science. And fun fact, rocket science isn't really rocket science. You see how many rockets they blow up, Jason, in La Boca Vista down there in Texas? He blew a hole in the earth last time. Mr. Musk, calculations say we're supposed to use about 80,000 tons of concrete. Your requisition is only for 8. It'll be fine. Sir, can you stop looking at Twitter for a second? We're trying to figure out how much concrete. Just use the 8. And he's happy when it blows up. This isn't rocket science. It's even easier. July 18th at 10 a.m., there's going to be a sell move, potentially on gold. It's going to last the entire day, all through the night into the morning on the 19th. 60 to 70% chance based on what we saw here today of that happening. Another one of these could happen over here. And 95% of gold traders will be on the wrong side when it comes. 95% of traders who saw this webinar who trade gold will forget everything I said when they leave this webinar and tell their wife about the kooky guy in the webinar tonight. I don't know how to break through. I've tried every which way. I don't know how to convince people. I turn the water into wine, Earl, then I reach down and I take off my sandals and walk on top of it. Miracle after miracle, and it's still not enough because I don't have the usual stuff. No lagging indicators. All right, we're coming around full circle. I just wanted to moan a little bit. We're ultimately looking for an edge. Trading is not a guaranteed profession. We're engineers here. I'm a degreed mechanical engineer. My partner is an engineer as well. We build stuff. And all we care about at the end of each week is what are the losses versus the gains saying? What is the expectancy of the model? Is it more profitable than not? That's all we care about. And all I wanted you to see today, Jason, everybody else that's here today, is that using a market like the ES on a 5-minute chart, the most common futures market we can look at, a lot of signals. There's an edge, but this edge is predictable. It tells us what's likely to happen in the future, and that's what trading is. It's about knowing what we're expecting something to happen in the future. If you're looking at a lagging indicator, if you're looking at order flow or VWAP or structure or wave patterns or any one of a litany of things, a veritable potpourri of possible lagging choices, you're not looking into the future. You're looking at what just happened or what happened right now, what happened in the past. It's over. And these are the props that the banks use to distract you. Theatricality and deception are powerful weapons, right? From the Dark Knight, Christopher Nolan movies, theatricality and deception, Ra's al Ghul to Bruce Wayne. And that's what these indicators are. It's theatricality and deception. It's a false sense of security. I know what the volume was just now. I know that it just hit that level. I know what that candle pattern is. You know what's going to happen 5 minutes, 5 seconds, 5 hours from now? No. And so it ultimately gives you this ability to be proactive instead of reactive. If you're always on your heels, if you're always defensive, you're going to be part of that 90-95% of people who are always losing money and wondering why it's not fair. It's not fair. You can use this on forex or futures, but most of the people I've met who make money consistently are using the equivalent spot currency with the futures. So they're looking at the euro currency futures instead of the euro dollar. They're looking at the pound currency futures instead of the pound dollar because the spread doesn't change, Jason. The pip spread isn't varying throughout the day. It's always whatever the commission of the trade is. And the good news is you can use micros now on the futures for those pairs. Yeah, it's just a better, from a business perspective, you always know what your cost of doing business is. If you were buying lasagna to make in your restaurant and one day the noodles cost $10 and tomorrow they cost $2, it's sort of hard to plan. But either way, yeah, so I hope we challenged your assumptions today a little bit more. If you suspected the game is rigged and you weren't really sure and you were hoping somebody could tell you one way or another, I hope I'm that wake-up call. The guys that consistently make money in every stock market crash are the banks. Record profits, by the way. JP Morgan just bought brand new banks for pennies on the dollar with the assistance of the Fed. Woohoo! That must be nice. Hey, I missed my mortgage payment. Bill, can you spot me? No problem, Mike. Thanks, Bill. Hey, try not to miss another one in the future. Oh, I will. That's what's going on. It has nothing to do with all the stuff you've been taught. It is a manipulation of casino proportions on a universal scale. And until you see that and come to terms with it and believe it, you will continue to struggle. This is what we believe. This is it in a nutshell, the golden rule. I know who rules the world. And I know why most people are failing. I love this screen. I love this. My indicators say you're supposed to go up now. Hey, no go up. You go down. No go up. You go down. Stop filled. All right. Hey, if you want this, there's a promo code today. Oh, we came a long way, you and I. The program that we're talking about is called TachEon Warp. It's our flagship product. It's the one that you see me publish all the time in the Facebook groups. It's the one that I'm using. I'm not using the moon stuff. If you're interested in that, I'll sell it to you. But the one that we use for everything is called TachEon Warp. I'm going to put a copy of the link into your GoToWebinar chat box. Yeah, Dave said a lot of emails now he's getting are for AI. Use our indicator, which is based on artificial intelligence, ChatGPT. No, it's an indicator from 1982 that they changed the color of. And now it's predictive AI. No, no, it's not. I love those emails. Michael, we're going to get you in on the ground floor of a revolutionary, groundbreaking indicator based on artificial intelligence. No, it's not. At the bottom of the page is a link, an orange Buy Now button. If you click on that button, it's going to take you to the purchase page. Yeah. And I wanted you to see there is a live training room that meets if you guys are interested. There's a customer and my partner Ron, who's also a trader, teaching that live room, live signals in a live market. If you're a hands-on learner, that's something that's available to you as another aid. If you don't want it, just click on go to checkout without it. And then here, you got some cool options. Number one, the promo code today for right here is WARPOFF. WARPOFF. Lowercase, no spaces. When you do that, it will take $500 today off of the price. and bring this down to 19.95. This is a lifetime purchase, one time, no update fees, no maintenance fees, no computer change fees. This gives you 2 licenses of the Ninjatrader indicator. You're going to get free installation. If you're not particularly excited about installing something, we can schedule an appointment with you and sort of do a white glove go-to meeting service. There is a video training archive. Any updates that are added to the program usually happens once or twice a year, will be available in the Customer Resource Center. You'll get a username and password for that. And the promo code. Who doesn't like free money? Nobody. So that's it in a nutshell. I don't want to belabor that point. You know what the deal is. I hate the money part. I would like to buy the world a Coke. However, I also have to keep the air conditioner running behind me because it gets hot in here in the summertime. Any questions about this or the lunar stuff or when NVIDIA is supposed to stop going up or down or what's going on with gold or what happened with the E-mini S&P? And we have the times for tomorrow. We have the times for the Asian session and Euro session. Everything is waiting for us right now. And this is ultimately a test of who you are as a trader. Are you a trader or a gambler? Because if you're a trader and you gather things that increase your statistical edge, then this should be a no-brainer for you. To the right of that chart are all the times for tomorrow right now. They're there, they're available. You can have them. You can have them on your computer in an hour from now and have a plan for what you want to do tomorrow. You could know when to take your calls and puts and your butterfly spreads and your rhinoceros raccoon plays and all that stuff you guys do with your options now. Or 95% of you will say, nah, I like to be surprised. It's more fun not knowing. Let it ride. Put it all on red. Woo! Which trader are you? Because it's not that much money compared to how much you guys lose. And I know how much you lose. You tell me when I call you. Anywhere from $10,000 to $3.5 million is the record. 2 people lost $3 to $3.5 million, and they still weren't profitable yet. And it wasn't their fault. They just didn't get the right tool. What do you want to be tomorrow? You want to be a 95%er or a 5%er? Choice is yours. Time is the most important factor, not volume, not price action, not highs or lows, not candle patterns, VWAPs. Those are all things you can use, don't get me wrong. I know people who use them and do well, but when you use them in conjunction with the timing signals, man, it's just a winning combination. So much easier to know what time of day to be ready. How'd I do today? I had a rough start. Didn't have my password ready. Did I do okay, Chris? Jason, Graham, Kieran? Okay, I got one fantastic. That's all I need. Why do I need so much approval? That's what my wife says to me, Earl. Why do you need compliments all the time? I said, not all the time. Like, throw me a bone once in a while. Hey, Robin. Long time no see, Robin. Good to see you. I saw your name there. All right. May the wind be at your back. May the sun shine upon your handsome, beautiful faces. May the roads in the valleys rise up to meet you. May the mountains, the obstacles lay low before you on your journey as a human being, as a trader, whatever you seek to pursue. We are for you. Ultimately, we do what we do because we love people. I love your stories. I love your struggles. I love your breakout moments. I get emails from people who went, the light bulb came on today. Here's what I'm doing. I'm making so much money. Woo! I'm addicted to those. I love hearing from you guys that are going on these big vacations now. I love hearing how you're buying your parents their dream car. I love hearing how you're able to support your parents in elder care in a nicer place because you've got extra money to work with. I love all of those stories. It's why I do what I do. It's part of my motivation. And so I wish that for you. If it's not with us, I'm still Team You. I hope you get there. I think it's going to be a little harder without our help, but sometimes you got to crack a few eggs to make an omelet, I guess. All right, customers, I love you too. I'll see you next week. If you have any questions, let me or Dave or Rachel know. You know how to reach me. If you get an email from a guy named Dave, he works with us for us. He helps new customers sign up. He'll help you find a way to get started and locked and loaded with us. So please answer his calls, reply to his emails. If he reaches out to you, he's a nice guy, I promise, one of the best. And until next Thursday, the market you trade is not random. If you leave here today without this tool and you wake up tomorrow, do not be surprised when your stops get hit at the time you thought you had the best sure thing loaded up. It's what they do. And there's a reason that you're failing using the other janky stuff. All right. I love you guys. I'll see you later. Have a good one. Bye-bye.